All right. So while the market is attempting a decent pullback and entering the test zone, the big story of the day is that JP Morgan has included India debt also in their index, and that is likely to increase a lot of flows from the FI side into the Indian debt market. And there are reactions coming in from the government side up till now. Much more superior macros of our country has actually resulted in good reflection in stock market gains. But bond market also needs participation, and that's what the chief economic advisor also commented on. But right now, we have somebody who actually deals with huge amounts of debt and understands this very well. Rajeev Radhakrishnan from SBI Mutual Funds. He's the head of the fixed income side, CIO fixed income. Rajeev, good afternoon. Thank you very much for taking time out for us. Talk to us, how big a milestone is this for Indian bond market? And what are
Yeah,
those metrics which they would have gone through and ticked the boxes at before taking such a decision?
yeah. So in terms of milestone, I do agree it's a significant development, given the fact that this has been an ongoing negotiation between index providers, their investors, as well as the government and the RBI over a period of time, and we have actually seen a significant amount of opening up in terms of debt limits. So now you have these FAR securities which do not have any investment restrictions, and a cumulative outstanding amount of more than 350 odd billion is there right now in FAR securities. So I think from the perspective of deepening the market, and more importantly to enable a new set of investors to be there on the demand side, I think it's a very significant development that has happened. And I think the in terms of impact on flows, one needs to see it's sort of the index inclusion process is a staggered process that starts from middle of next year and ends until March 25. So you will see flows coming into the markets over a period of time, and I think it's a significant development from the perspective of ensuring that there is a new source of demand for government bonds.
Rajiv, sure. A
Yeah.
lot of people have started giving their reaction. Citi, for example, as saying that they expect India bond yields on the back of this development to fall to 6.8%. I want to
Mm.
understand from you more directionally what's
Yeah.
happening in the world right now. How superior indeed are our macros, or do you think India macros are also susceptible to, global fragilities?
Yeah, very clearly, when you look at on a relative basis, let's, I will probably speak more relevant from a fixed income and in a very from a macro perspective. So when you look at India's balance sheet, so let on the fiscal side or on inflation and on the external side over the last so many years. So let me just go back to the taper tantrum, incident when India was considered one of the fragile few, where you had double-digit CPI inflation, fiscal deficit was again, combined deficit was close to 10%, and you did have significant pressure on the external sector. But over those, so the last so many years, we've actually seen on a relative basis a significant improvement in India's macro. So we have seen inflation from double digits come back. Of course, it's a near-term challenge that I'll come to that later. But on a relative basis, we have actually seen a significant deceleration in India's inflation, and again compared to most of the other both emerging as well as developed markets, I think the inflation outcome in India has been relatively better. Fiscal dynamics in India have continued to improve, and that is something probably is a little bit understated and not really being appreciated, given that the incremental buoyancy that we are seeing in taxes. I think there's a lot more positive story that will evolve on the fiscal side over the coming years. And finally, on the external sector, because a foreign investor in India's fixed income market would be very wary or very conscious about how the currency markets play out. And India's external sector balance sheet is very strong. So you have a current account deficit, which is eminently sustainable by stable capital flows. You're looking at something like 1.5% deficit on the current account on a more sustainable basis, which is completely funded by capital flows without creating too much of volatility. So you are still looking at a situation where the balance of payment over a period of time should stay positive. Now, when you look at this, plus the fact that on a relative basis, India's inflation differential with the external world has significantly tightened or narrowed, the outlook on the currency should be fairly, I would say, sanguine or fairly robust over a period of time. Of course, in the near term, when the dollar is on a broader strengthening trajectory and there are ebbs and flows in capital flow, the way it pans out in India, you will potentially see the currency coming under intermittent pressure. But from a slightly longer term perspective, very clearly India's macros are far better than what it was 10 years back. And today, on a relative basis, even when you look at economic growth rate projections, so I think even at 6.5% real GDP growth, India's growth outcome is materially better than most of the other markets. So I think there is a good story in terms of on a structural basis, a good macro story. But yes, in the very near term, we do have challenges. And the single biggest challenge that we still have is inflation staying above the RBI's upper end or the tolerance band. So the policy intent or the policy objective is to bring CPI inflation closer to the midpoint, which is 4. And I think we have still a lot of distance to cover there, even though the RBI has tightened rates over the last year or so. I think so. The immediate challenge from an Indian fixed income perspective would be how inflation actually comes back closer to the RBI's policy target and what incremental actions may be required by the central bank. So that's the near-term challenge that you have. But from a slightly longer-term perspective, the fundamentals that I have said will play out, and that should lead to material flows coming into Indian fixed income markets over a period of time. May not translate it into flows in the very near term. I'm talking about slightly on a longer term basis.
All right, Rajeev, we'll let you go on that one. Thank you so much for taking time out for us today. Before we wrap out of this